Okay. Welcome everyone to my second video, which is going to give you a taste of companies currently operating with crypto assets or types of companies in the DLT sector. My name is Mustafa Gezera and I will be your presenter for today. If you have reached to this second video, then I guess you may hear me for a few more times. As you may know, I will always start and end my presentation with a fundamental quote. I start this presentation with Alexander's quote. So why Alexander the Great was actually great? Simply, he became the king of Macedonia before he turned 13 years old. He changed the course of history. One of the world's greatest military generals. He created a huge empire that stretched from Greece to some parts of India and from Macedonia to Egypt. Anyway, Alexander said, "There is nothing impossible to they who will try." He tried to conquer part of the world and he found it was possible. So if you want to go and learn or do something, you may just have to try it. Even if there's no regulations on the place or the environment where you want to try. And that's how crypto companies evolved. They tried to operate in an unregulated space to benefit from blockchain technology and DLT, of course. Then governments, they started to amend their rules and their regulations to adopt crypto assets and to regulate the operations of crypto companies. And now we know that Zug, which is a canton here in Switzerland or a state in Switzerland, they became the global capital of cryptocurrencies, crypto assets, and all other types of digital assets. This is the content of my presentation. In the beginning, I will give you some key facts about the corporate identity of a DLT company. Then I will talk to you about the different types of companies available in the DLT market. Then I will end my presentation with a motivational quote mentioned also by one of the great leaders that history ever knew about. So to start, several companies have performed and now hold huge investments and positions in the digital class of assets. There are private and public companies that are currently operating in the DLT sector. So as you know, DLT companies listed on the stock exchange where they operate, they must prepare annual financial statements for shareholders. However, private companies only share their annual reports, their financial statements with tax authorities, financial supervisors, and other independent auditors. Despite the substantial interest of corporations, there is no accounting standard by related government agencies or an accounting standard setting body or an industry group. Therefore, companies must and they have no other option but to rely on published guidance from associations and groups in order to address concerns in their financial statements such as regulatory uncertainty, financial reporting, and also the legal compliance. Okay, this part illustrates on the three groups of company that are holding or issuing crypto assets. So the recognition, the measurement, and the presentation of any accounting item in the financial statement will always depend on the business model of the companies that are operating in this DLT sector. So the purpose of holding and developing DLT and blockchain technologies and crypto assets still varies from one corporation to another. There are three different groups of businesses operating in the DLT. The first one are the blockchain service providers, and this is the group which consists of corporations that develop crypto assets using blockchain and DLT. These companies develop blockchain technologies in their ordinary course of business. That's their only business they do. However, the second group comprises investment companies that hold digital assets as investment tools in their supply chain. For instance, these companies consist of asset managers who offer DLT funds for their clients to invest in crypto assets. And lastly, the third group consists of exchange companies and brokers. And these are the most important ones because they provide a platform for cryptocurrency exchange and to help their clients to trade with other types of currencies. And this is where usually the trader actively buy and sell digital currencies on an online platform. Okay, so in this part, I will explain one example of companies that are currently evolving in the DLT sector. So what do we know about asset managers who are currently operating in the DLT sector? Well, what we know for sure is that asset managers, they offer active investment funds for both private and institutional clients. Asset managers, they buy and sell digital assets that operate on the blockchain network. That means that asset managers can actually offer collective funds that contain a mixture of the most traded digital currency. So they offer a fund that tracks Bitcoin, Ethereum, and other types of digital assets. And they rather act and trade actively in the exchange markets on behalf of their clients. Now we go to another significant example, which consists of brokers and exchange firms. This is where the buyers and sellers exchange cryptocurrencies with other digital currencies or fiat currencies based on the market prices that is being offered by the broker or the exchange market on this specific day of trade. And the crypto exchange market contains trading platform, huge amount of trading platforms that acts as a connection between the buyer and the sellers of digital assets. And these platforms charge a transaction fee for the services they provide to the participants or the users of the platform. Now we come to the section where companies provide blockchain solutions. Cryptocurrency mining, storage solutions, and the issuance of digital assets are the primary services that is promoted by blockchain service providers. These companies obviously require operating licenses, and this will always depend on the local regulations where the company is currently operating. For instance, Swiss companies offering blockchain services, they need to get a fintech license from CIMA, which is the financial regulator here in Switzerland. And companies, they must comply with the local regulations to avoid being liquidated by the local financial regulators. Because companies that issue new tokens on the deposits of its customers, whether they raised these funds from ICO, STO, or IEO, well, taking deposits from individuals in almost every country, they require regulated licenses. And these companies, they must report financial statements, business plans, business operations to the financial regulators to actually gain and to be issued a license in the specific environment where they operate. Now I come to the solutions that is being provided by the types of wallet providers that we currently have in the DLT space. From what we know up to this knowledge is that stock exchanges in New York, Tokyo, or Hong Kong, they don't serve as custodians for the invested funds. Instead, it's actually the bank, financial institutions, and the clearing houses are regularly the custodians of these traded funds. However, in the DLT, please note, this is the most important thing. In the DLT, private keys, they represent the purchase executed by the client of the digital assets. However, only one specific user can actually control the private key. Hence, clients seek a secured location where they can protect their investment. Therefore, some companies, they either offer a custodial wallet services that promote storage solutions for the private keys of its clients. It is the responsibility in this case of the custodial wallet provider to actually secure and store the client funds on their behalf. So this is the bank. This is where the safe where you put the money at. They serve as a bank to hold deposits on behalf of their clients. However, we have another type which is called a non-custodial wallet. And in this case, this is the duty of the private key holder to protect against information leaks. That means if an individual gains access to the private key, the person who owns the private key is the one responsible in this case. And it's not the responsibility of the wallet provider anymore. So after all, some holders, they may feel convenient with a non-custodial wallet because it hides their funds from third parties. But the types of wallet services certainly impact the reporting duty of crypto assets in the exchange company or the wallet provider. For example, non-custody wallet provider does not control the private key of their depositors. That means that these companies may not be required to actually report client assets on their financial statements, where on the other hand, custodial wallet exchange providers may hold the reporting obligation to actually disclose the funds and the deposits on the balance sheet of their company. And this will always depend on the legal and regulatory information and requirements that are required from each type of company in the local environment where they operate. Now I come to my concluding quote, and I chose Genghis Khan because he was also a great leader who conquered very huge parts of Europe and Asia. And he said, "There is no value in anything until it is finished." And that's really the main point here, is that I will provide you with more information regarding the specific challenges that face companies that I've mentioned here in terms of issuing financial statements and notes disclosure with crypto assets. I will also explain the challenges that face auditors when they provide assurance services on the financial statements of their clients. So, thank you so much for listening to me today, and please be tuned and subscribe to be notified about the latest videos that I will upload in the next few days. Thank you.